So there's a lot of confusion around the monthly payment and why it seems to go up over time. The question that I get asked over and over again is, Adam, I've been in my house 1, 3, 5 years and my mortgage payment went up. I thought it's supposed to stay static over the term of my loan. Well, you are both correct and incorrect at the same time on that, and let me explain why. So your payment is broken down into 4 pieces, P-I-T-I. This is your principal and interest, that's one section, and then you have your taxes and insurance, that is a different section. Over here, your principal and interest, this is a static payment, okay? Let's say it's $700. So combined, this is going to stay static, but over the term of your loan, this individually is going to change. So you might start off with paying $200 towards your principal at the beginning and $500 towards your interest, but as the term of the loan continues to go on and mature, it's going to start switching and more is going to go towards your principal and less towards your interest. So towards the end of your loan, you might be at $500 towards your principal and only $200 toward interest. The reason for this is because, well, the bank wants their money. The interest is what they make off of this thing, so that's how they're getting their money. So of course they front load that in case you happen to pay off your loan early. So that stays static over the term of your loan combined. Now let's talk about your taxes and insurance, because this is fluctuating and this is where people can find themselves in a predicament because they weren't expecting that monthly payment to go up. Your taxes will almost always go up and up only. There's very rare cases where your taxes can go down, and that's pretty much if your property declines in value or if the millage rate in your local area or state happens to go down and taxes decrease because of that. Usually doesn't happen, but it is possible, okay? And then the other part of that is your insurance that you get. You can get quotes from different places. Typical around here is between $700 and $900 in York County. It's a good average for most people in that kind of $200,000 to $400,000 price range for homes in that kind of area there. So your insurance, that can go down, okay? So you can get a quote from somebody else and get that insurance to go down. I have an insurance quote of about $560 myself, which is lower than the average. Shout out to Jake Brendel for that awesome quote. I appreciate it, brother. But that is the portion of your loan that can fluctuate, okay? So if you see your monthly payment go up over time, that's because your taxes have probably increased more than anything, or your insurance has also increased. So make sure you take a look at the breakdown of that payment, compare it to some of your previous statements to see where that change was made, so that way you can make sure you're understanding it correctly. I tell everybody, try to account for $20 extra on your payment every year. It's probably not going to happen that way, nor that drastic, but that way you're prepared and ready in case it does happen.